What's going on, traders? This is Devis from Trading with the Bulls, and on today's trade breakdown, we're going to be going over GBPUSD and my confirmations on why I entered the trade and how it is that we took it all the way down to 243 pips in profits. Guys, that is a lot of profit, a lot of pips. But before we go ahead and do that, go ahead and drop a thumbs up, subscribe, and comment what Forex related videos you want me to cover next. Let's go ahead and get started. Alright, traders, so let's go ahead and get started and take a look at this GBPUSD trade that I took last week and see how we took the sell all the way down to 243 pips. So I'm going to go ahead and give you some insight as to what it is that I saw to go ahead and take this trade and the confirmations basically that I took. So let's go ahead and get started. I like to start on the weekly time frame. Usually on Sundays, because of course Friday you do get that close of that previous week's candle, so you can go ahead and on Sunday start to analyze what's going to be coming up for the week ahead. So I start off with a top-down analysis. So we start off in the weekly, drop down to the daily to take a look at it, then we zoom into the 4-hour to get a little bit more details, and then in the 2-hour, 1-hour, 30-minute time frame, you can really start to get those precision entries. So of course, the first thing you want to take a look at when you are on your weekly and daily time frames is your market structure. That is one of the main things that I like to look at when I trade, and I do respect what trend that the market is currently moving in. So for example, GBPUSD on this weekly time frame, we are in an overall bearish trend right now. You can tell by these highs that were created all the way back in April and March. Then we go down to these lows here in December. Then we came up for some what's called a lower high right over here, and then we come back down to these lower lows, and then we pop back up to these lower highs over here, which is where we took our entry, and then we wrote it down to 243 pips, as I mentioned before. And of course, we might be looking to see another possible either low or maybe come down to a lower low. So let's see what's going on. But as for now, let's analyze this trade that we took. So overall, on the weekly time frame, we are looking at a bearish market. So I really want to be focusing mostly on sells, but let's drop down to the daily and get a little bit more details. So now we can start to zoom in. And once you start to see your market structure, so we have here these highs again met with these lows, and now we have these highs here coming up with the support and resistance. So that's one of the main things I take a look at with my market structure. I start to find those key levels of support. They could be either, a place in the market like a price point, or they could also just be zones where the market is, either is finding a lot of resistance or is currently finding a lot of support. So right here, we'll draw it out with a horizontal line. You can see that the market found some level of resistance in this quarter point level of 1.2500. So let me draw that line right here. And a quarter point is from the quarters theory. If you've read the book or if you know about the quarters theory, it's basically a quarter point. It's a zone in the market that does tend to respect. It's also like a psychological level as well. And as you can see, we found previously in the market some clear support around this price range. And then here, of course, we did once we broke it down. So these are some of the best trades you can take. Let me get some arrows here. When the market finds this level of support here and then moves down to break it, then comes back up to test it, and then shoots down for either, like I said before, a low here, or it could shoot back down to another low, depending on how much strength that trend has. And if it's been going on for a while, it might start to lose a little bit of steam. So let me go ahead and remove these arrows. So once we take a look at our market structure, boom, we check that off our list. We see that we are in a downtrend. We were going to be looking for sells. Then we draw our support and resistance zone. So on that daily, we have that quarter point level right here, which is met with clear resistance. So now we start looking at candlestick. Either you can start looking at patterns, you start analyzing the details in the candlesticks on the daily, and then you can start to zoom in the 4 hour, the 2 hour, the 1 hour, the M30, depending on how low you like to go, and how intricate you like to get with your analyzing. But here in the 4 hour, we'll go ahead and we'll zoom in a little bit more. So basically, the importance really of multiple time frame analysis is that you can get more details the lower you go. Of course, you do get a little bit more noise, some extra movements, like unnecessary movements that don't really matter in the overall scheme of things, but you can get that extra level of details that you can't see in the daily and maybe even in the 4 hour, because of course it is a little bit more compressed data. But here you do get, we'll go ahead and draw it out with a circle, one level of resistance here, 2 touches. You can count this wick here as a 3rd touch, and then this right here was a false breakout. You know, it could have stopped a lot of traders that decided to take their sells right here and then just put a tight stop loss, you know, right above those highs. It would have taken out all those traders right over here. So anybody who got in a little bit early, I'm sorry, you know, because you did have these 1, 2, 3 levels of resistance, they took their sells, they would have gotten stopped out right here. One, you did have a little bit of a tighter stop loss. You know, you always want to give, especially in the 4 hour and the daily, if you're going to be going for long swings, you do want to give the market enough room to breathe. That is one mistake that a lot of beginner traders make. They put stop losses way too tight to avoid, you know, big losses, but what you end up doing is you end up suffocating your trades. So as you can see, let me just zoom in here so you can see this trade that I took. I had 110 pips stop loss, but I was going for a target of at least 243 pips. So that's a 1 to 2, really a 1 to 2.2 risk reward. So right here, when you lay down your risk to reward ratio, it'll let you know 2.2. So that's a 1 to 2 risk to reward ratio. So what that means is for 110 pips that I risk in the market, I'm looking to make 243 pips. So basically, if I lose over 50% of my trades, I'm still going to be in profit simply off this risk management plan that I have in place, which is every trade that I take, I must meet the 1 to 2 risk reward minimum. Some trades it could be 1 to 3, even 1 to 4, and that's even better, but the minimum is 1 to 2 risk reward. So if I risk 10 pips, I'm looking to win 20 pips. That is, in my personal trade plan, one of the golden rules that I always have to respect. And you know, I would definitely encourage you guys to implement that rule, and you are going to be seeing a lot more success in your trading and a lot more basically consistency in your trading. So here in these zones, if we start to zoom into the 2 hour, now we see that candlestick confirmation that I was telling you. So here you can see a lot of rejection, but none of the candlesticks actually telling you that that bullish trend is done. You know, you don't see any bearish engulfings here. I mean, you do see, you know, little tweezer tops and things like that, but nothing major in the candlesticks up until that false breakout right here, when you're met in this minor support and resistance level. And the reason why I call this arrow right here, this little support resistance zone, I'm sorry, a minor support and resistance, is because if we quickly just come back down to the daily, you can see that where that arrow is, if we stretch it all the way back here, it was once a minor level of support right here with this trade and this, I'm sorry, with this price range and this price range here to confirm it, and then here back down with a minor. So this means it's not a major zone, but it does have some level of effect on the market, where it came here to test it one more time before ultimately making its move all the way back down. So we come back here to the 2 hour, and now you start to look at your candlesticks to get that confirmation. And as you can see, this right here, this confirmation on the 2 hour for me it was good enough to enter the market, and basically that's when the market let me know, hey, these buyers are out of steam. You know, we do have that 1, 2, 3 touch of resistance in this quarter level. A false breakout immediately met with sellers. So that for me was enough confirmation to enter the market, put a nice tight, sorry, not a nice tight stop loss, put a nice wide stop loss of 110 pips right above that high. So I have enough room for my trade in case it does want to come back up and meet this high one more time. You know, I have enough room to let the market breathe. And then right here you have, so I'm going to move this arrow back down to another minor level of resistance, which is where, if you could, as you see, is where I decided to take my trade. Right here, I knew that the market was going to have one more little pullback because there were a lot of, you can see it start to slow down. So you see a lot of bearish momentum, and then you see these smaller candles here just really start to slow down in that momentum. That usually lets you know that there's going to be maybe one more pullback, maybe two, but you are going to get one more chance of re-entry. So I put my entry at this minor level of support. I'm sorry, at this minor level of resistance. And as you can see, we had very little drawdown before the trade ultimately started making its move back down all the way to our target of 243 pips. Okay, so now I'm gonna give you some tips here that I like to basically take. And once this level of support, this minor level of support was broken, I immediately take my stop loss and move it to break even. So basically, if we take our ruler, and once that trade went 70 pips in profit, I went ahead and put my stop loss to break even, and that way I have a risk-free trade. So that trade could come all the way back up to our original entry point, and it would take me out at no loss. Basically, I'd be at break even. So this trade right now is risk-free. That means that I can go out and about on my day, whether you go to work, whether you go to your daily activities, your hobbies, or whatever you're doing, and you don't have to worry, you don't have to be constantly looking at the charts because you're basically in this trade risk-free. So that is very that plays a huge part in your psychology when you're trying to hold on to these trades, especially when you're deep in profit, and especially if you have larger lot sizes. You know, you might want to, your psychology is trying to tell you to get out early and get your profits, but really you want to write it down to your original target, as we did here. And instead of cutting our trade short at 70, 80 pips, you can take it all the way down to your original target of 200, 240, whatever your take profit is. So once you know your trade is moving in profit, it breaks past whatever level of minor support or resistance, go ahead and move your stop loss to break even, and then just basically then just hold it down into your target, or unless the market gives you a reason to get out. So right here, these highs were never broken, even on a 2-hour time frame, which is still a smaller time frame, so it could be temporarily broken, but the highs were never broken. So let me just move this back down here. These highs were always respected, and then of course our target hit here. The reason why I had set my target there was because on that 4-hour previously below here, you saw a minor level of support where the market came down here and it found a huge rejection, and then still pushed all the way to the upside. And as you can see, it respected that level one more time, and it did end up pushing back up, but we were already out of our trade because we had hit our take profit. So thanks for tuning in, traders. Don't forget to comment what topic you want to see me cover next. Hit subscribe, and I'll catch you on the next trade.